stock market weekly chart review for September 12th through September 16th, 2022. Let's start off with looking at the portfolio composition of the S&P 500 via Fidelity's website. What we're going to do is use the S&P 500 as a proxy for the overall stock market. Now, I know there might be a better way to do it, to look at maybe the S&P 500 plus the NASDAQ, or however you want to do it. But we're just going to keep things relatively simple. I'm going to look at the S&P 500 for proxy of the overall stock market. Because whatever the overall stock market's doing, it's putting weight to support stocks up or to help suppress stocks down. So knowing what the overall stock market is doing or potentially will do can be to your benefit. The other thing you can do is just trade the S&P 500 if you know what the S&P 500, if you have an idea of what the S&P 500 is going to do. So in order to have a better idea of what the S&P 500 is going to do, we're going to look at the portfolio composition of it. Right here, Fidelity is showing that currently the S&P 500 is made up of 507 stocks, with the top 10 of those stocks being Apple, Microsoft, Amazon, Tesla, Google again, Berkshire Hathaway, United Health Group, Johnson & Johnson, and the newest to this list, ExxonMobil. So I think it's 6 out of 10 are healthcare. 6 out of 10 are technology. It used to be 7 out of 10 until ExxonMobil replaced something. The next thing we're going to do is we're going to look at this sector exposure. And this is really where the crux of this hack comes. As we look at the sector exposure. Now, if we wanted to, we could find correlating ETFs with all of these sectors. But we're just going to take 5 out of these. So we see information technology makes up the bulk of the sector makeup of the S&P 500. And then we see it's healthcare, and then consumer discretionary, and then real estate. With a caveat, here real estate is listed again. And it used to be, the financial sector used to be here around this amount, but now it's real estate twice. So we're going to look at real estate and we're going to look at the financials, even though it's not listed on there. But you could do this. You can do this for any ETF. You can look at the portfolio composition of it, find out what stocks are in it, watch those stocks, and then if the bulk of those stocks or the heaviest weighted ones are going up or going down or going sideways, then it's more than likely your particular ETF is going to do that. So here we have the S&P 500 with 5 different ETFs. XLK is a technology ETF. XLV is a healthcare ETF. XLY is consumer discretionary. XLRE is real estate, and XLF is a financial real estate. Financials ETF. So we'll look at those, break those down, and let's quickly take a look at this. This chart is different than this, even though it might look somewhat similar. And when we look at the candles of these red or green things, if it's red or green is determined by, did the stock close higher or lower than where it opened. So for example, by looking at this, we can tell if it's red, then we instantly know it closed lower than it opened. If it's green, it's the opposite. We instantly know that it closed higher than it opened. Right? So red, it means it opened here, closed here. And these things over here show you the full trading range. But this is the open, that's the close. And conversely, the green, it opened here and closed here. Right? So that's, on conventional candlestick charts, that is what the color is determined by. Now, this chart is a little bit different. And this, the red or green, the green or red is not determined by open and close, right? We see this long string of green. This is determined by money flow. So this part up here, not this part down here, that's just weekly stochastic, but this part up here, it measures money flow. So it's got like a higher gauge that money needs to be flowing into or out of at a higher level in order for it to change from green to red or red to green. Now this yellow is sort of an in-between, right? So when it was red here, money started flowing in, but it wasn't enough to instantly trigger this green. But money started flowing in more. There was like, it's not enough money flowing out or money trickling in to be red. So it goes to this yellow, showing a potential color shift. So with that explanation, let's look through here real quick, and we'll also look at this stochastic. This is a weekly stochastic. You can see it says it up here, weekly stochastic. So even though these candles are daily, this stochastic shows a weekly trend. So it's a little more powerful. Personally, I like the stochastics on the weekly, even the monthly, because it shows such a big time frame. It just gives you a quick, instant look at what the current big trend is. Right, so we see for the S&P 500, it's been red for about 2 weeks now. So money's flowing out, and we see that trend is down. The other thing we can look at on these stochastics is what are the distance between these two colors. So for example, during this time, we see this wide range, wide distance between here. So if you had been buying through this time, or at least the stochastic is showing you that this is a strong uptrend during that time. Now here we're still in a strong downtrend, even though it's not as wide as that, but it's still strong. So technology, wow, look at that gap between there. Strong trend down, and we see money flowing out of. Healthcare. Now healthcare, we see turned green 3 days ago. So we got Friday, Thursday, Wednesday. Wednesday it turned green, right? Switch from red to green. So money started flowing in. Well, we see our stochastic kind of doing the sideways thing. We kind of see the sideways look there too, right? Consumer discretionary, green with a similar stochastic. 3 days, so turn green on Wednesday. Real estate, downtrend, sort of at a slower slope. Kind of, it's still going down, but it's not as pronounced as some of the other ones, and money is still flowing out. Financials, same thing. We got this kind of the red on the stochastic. The red line is still under the yellow, which is indicating potential downward, and pretty much at any time it could just really widen up and open, or of course it could cross up. But it's a lagging indicator, so that's something that that's why I like the longer term ones, because it's lagging. So I feel like trying to make a decision just based on a stochastic sometimes, depending on the trading style you're doing, I like to look at current information, which is price action versus a lagging indicator. And nonetheless, though, money is flowing out of that. Let's look at the actual price action. So now we're S&P 500 weekly chart over the last 2 years. So each one of these red or green candles indicates 1 week of trading. And we see, let's look at the volume first, right? So we got volume down here, it's red or green. We see in the last, since the last like month or almost 2 months, there's really kind of been, overall, it seemed just like more selling, right? Because even though maybe there's these days where it looks like we see more green, we're seeing more pronounced on the red when we see it. Definitely in the last 1, 2, 3, 4, 5, 6, like month and a half, it's definitely just been sellers bringing it in there. And we see this candle, huge weekly candle to the downside. Really fell below this 50-day moving average. And something else to take note of is that the body of this candle has completely engulfed this candle. And before, you know, we had this candle. You can see the body of this green one is longer. But look what happened here. You know, we had this downward 3 weeks going down, 1 week going up, and then this massive selling just engulfing that. Technology, looking similar, just not as massive of a down candle. But look at that, really did engulf. Now, one thing that's different with the technology ETF is that the green up candle did not engulf this this previous week's candle. The previous week's candle is engulfing that green one. So gave you kind of an indication of you know, potentially weak, but we want to see if it was going to rebuild. Is it going to kind of go sideways like this? But this gave us our answer. This red candle came in and completely engulfed the body of this one and engulfed the body of that one. Significantly broke on that 20-day moving average. A volume, same thing. We got in the last month and a half, we just have this massive amount of selling volume, especially on the last week. Healthcare. Actually, let me point something out real quick too here. Since we're looking at a 6-month chart on a two-year time frame weekly, what we can do is we get a quick look at this 200-day moving average. We see on a weekly on the weekly chart over the last 200 days, our trend was up. Now that's not true right now if we were to switch to a daily. However, this is the weekly chart review, right? Not the daily. On the daily, we've been under the 200-day moving average for quite a while. You can see that here, crossed over that. But the weekly, we see that it's still above the 200-day, and the 200 days got a nice slope going up. 200 days our long-term trend. Our midterm trend that we're looking at is this 50-day moving average, which is starting to slope down back here around it's like March or wherever it was, March, April, somewhere in there, started to slope down. Our 20-day moving average, which we're looking at for a shorter term trend, is really on the downward slope, and we're going to be, it looks like we are going to be testing this 200-day moving average. Same thing here. We got that rising and broke there. Same thing on our healthcare, above that 200-day moving average. Really a massive amount of selling volume been in for the last month and a half. And we're hugging closer to this 50-day moving average still, right? We see that this week's candle has opened below. Same thing, we had these 3 downward weeks, and then we get this really big bullish candle up, but this bearish candle brought back down here. So if we look, when we're looking to the left, where besides this week, right, where's the next biggest drop? Okay, the biggest drop would be right here. So once this happened, once this happened, we want to see how long does it take to rebuild this price to get back up to this level. And we see it took 1 week, 2 weeks, 3 weeks, all the way down here. So by the 3rd week, we're back down here, right? We're higher than this, but we're not. At least here, we were in the top 50% of this candle. Touched this 50-day moving average, and the selling just brought it down here. Closed below the 50-day, closed below the 200-day. With overall, you see for a while, it's really been going sideways, right? It's kind of been this range between here and here. Now it's tightening up between here and here. Healthcare. Consumer discretionary. Same thing with the selling volume. Way more selling volume over that 200-day moving average, but starting to dip down into it. Below that 50-day, still above the 20-day moving average. And our bearish candle here, just eyeballing it, maybe it's about the same. Just eyeballing it, right? We could figure out where the open, where the close, where the open, where the close, and figure out which one is which. But it, like this, obviously engulf this. You know, if it's not an obvious engulfment, and we see some trading up higher, some trading up lower, and it's kind of in the more the body in between those two, but really decidedly to the downside. And the same thing here, prices drop down here. We're below there, but still above that. Real estate, same thing with the volume for the last month and a half. Just a lot of selling volume. I'll look at that. That's an obvious engulfing candle. That bearish engulfing candle, just totally swallowing up that bullish candle here. Now we're testing that 200-day, right? Significantly below the 50, below the 20-day sloping down, coming down to touch that 200-day, but prices moved up a little bit. We're really close to that 200-day. So financials, same thing, lots of selling volume. Look at that massive selling volume for all these ETFs this week. Looks like engulfing the bullish candle, previous week's bullish candle, not by a whole much, but still seems to be engulfing it, and looking real similar, right? So what do we think is going to happen with the S&P 500? While we're discussing that, let's look at how this risk indicator closed out. Closed out the week at 234.80. Now, what is that in relation to since August 29th, when I started putting on this lovely chart here for your convenience, which I don't know why these numbers don't show up, but these do. And I don't know why there's not dates down here, so I had to kind of rig it up here for you. So we see that since August 29th, and I've been charting it here daily, we see that it's on a slow rise, right? We see a rise up there in the last 2 weeks, 3 weeks, whatever that is. But here's what I want you to look at. I want you to see that there's 4 different ranges of this: low risk, moderate risk, and high risk. We've been in the low to mid range of high risk for quite a while. So considering all that, considering that we have money flowing out of most of the stocks that make up most of the stocks of these ETFs that we're looking at, with healthcare and consumer discretionary money starting to flow in, but money is starting to flow in under this elevated risk that we've been in a while. And just looking at all the stuff, I think that we're probably going to continue to see this downward trend with some rallies up like this. The other thing to keep in mind, and this starts getting this is an indicator. It's a little more, I guess, scientific or mathematical, but this one not so much, right? But apparently we could say this is we know this to be a fact, not so much because it's here on Wikipedia, but because it is created by executive order and on March 18th of 1998 by Ronald Reagan. And it's the President's Working Group on Financial Markets. And this is known as the Plunge Protection Team. The Plunger Team, Plunge Protection Team. You can read all about it if you want. You see that there's tons of articles and information you can get on it. But why would I bring that up right now? Because we're coming into these midterm elections. So there's this plunge team that can help regulate markets. So maybe they want to keep it from plunging. Maybe they want to do that during some midterm elections. So we have to kind of keep that in mind, that there can be anything going on to the upside or the downside. But we're obviously in a downward trend. I think at some point, at the minimum, we're probably going to come and test these. We'll have to see what happens next week for sure. But I wouldn't be surprised if at minimum we're going to be, I'm not sure if it's going to be next week, but I would not be surprised at all if we're going to test this these lows of back here around the 370 area. It's pretty close, right? We're at 385. It's only $15 away. So I wouldn't be surprised if we see that that happen. And I think the FOMC meeting is going to be coming up. It's the Federal Open Markets Committee or something like that, where they're going to be looking at raising like 75 or 100 basis points on interest rates. I know that that's coming up. I know that will have an effect on the market. I don't know the best way to explain it to other people, but that is coming up and could potentially cause the stock market to go down a little bit more. So that's my prediction for the S&P 500. I think that it's possible that we might see a test of this 370 area. So when I say area, anywhere in here, just kind of in this range, right in there, right? I think that that's possible. Pretty darn close to seeing that. So in the meantime, while we're waiting for that to happen, go to ihavesuccess.com. There's going to be a link in the description below. Download all 4 of these. Download any of them you want. And then when you do that, starting this Monday, September 19th, every day a daily stock market review will be emailed to you, to your inbox, looking at the same indicators, same information I'm looking at, and give you a little more idea about what I'm doing in my personal account to take advantage and sometimes mitigate some things that are going on. You guys have a fantastic week, and I'll see you soon.